Good morning, everyone. Welcome, YouTube. Welcome, traders. Welcome, everyone. Today, we had the main event of the day, right? We were waiting for that CPI, that inflation data to come out, and it came out, right? Yesterday, we had this monster rally into the close of the session, prompting a lot of people to believe that we had the leaked data. And just like that, we had a softer number in the CPI data, prompting a massive, massive upside to continue in the overall market. Now, JP Morgan was in the news last night and during the day making some or in the morning here making some pretty bold claims that we would see a 10% rally in the S&P if we got 6.9% or lower in the CPI number itself. And they were pretty much expecting a softer reading, and that's what we got. So there's a lot to discuss about the CPI and the inflation data, what the numbers mean, what this could mean for the future market movement, what could this mean for the Fed, so on and so forth. So those are a lot of things that we do have to discuss today. But first, let's start off with these numbers, right? The CPI number, uh, bu- 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 just loading it here. Um, So the expectations was 7.3%, right? Previously, 7.7% came out 7.1%, which is a softer number, bringing on the peaking inflation number, right? We have seen lower numbers month over month, continuously, or I should say year over year, continuously. And the month over month, 0.1% versus 0.3% expected. The core number, 0.2% month over month versus 0.3% core expected. Core CPI year over year, 6.1% versus 6% expected. And it seems like we had somewhat of a data leak of these numbers because we had the monster bull rally yesterday, which prompted just buy stop run from nothingness pretty much. Now, to take a look at what's going on here, with this inflation data, we had a very strong rally. Has inflation peaked? It doesn't seem like the inflation number was going to come out hot to begin with this morning, right? And neither did economists. A lot of people were looking for a cooling off based on what was going on. And this is perfect just into the Fed announcement that is coming out tomorrow, right? The peak was 9.1% back in June, and we've dropped about 2% since, right? And yeah, it's taken half a year to drop 2%, so keep that in mind. Based on that, we're not necessarily going to see the 2% inflation target for quite some time from the Fed, and they're probably going to adjust accordingly. Now, these results that came out softer than expected, right? Out of 10 monthly CPI readings that were published in 2022, only one of them hit expectations in February, 7.9%. Eight of those headline figures came in hotter than anticipated, while two of them were lower than the consensus estimates, and there were no major surprises. However, with the spread between actual prints and their forecast reaching a maximum of 0.3%, right? Keeping an eye on core CPI data, which strips out volatility for food and energy prices, that figure has been bouncing around a lot more this year with another high of 6.6% recorded just 2 months ago. And this could be a key gauge if pressure is seeping into more parts of the economy. And today we saw that core number come out at 6%, right? A drastic drop from the peak at 6.6%. Notable categories to watch are going to be rent and shelter costs, public transportation, medical services, and college tuition, naturally. And based on that, what we've seen is a very, very, very decisively strong rally. So, what does this mean not only for today, but for the broader market in general, right? How could things shape up in the broader market? Now, realistically, we have a very, very high likelihood of only a 50 basis point hike tomorrow. I believe it's over a 95% chance of a 50 basis point hike, which is going to be the first 50 basis point hike in quite some time after seeing all those 75 bips, which, again, is to be expected, could start some kind of upside movement. And is this the bottom of the year? Yeah, right. We only have a few weeks left until the year is over, and the bottoming of the year is priced in, right? Now, is this going to necessarily be the all-time bottom, right? And we start a new bull market rally from here? That is a little more it's a bigger question, I would say, than marking the lows for the year, because again, yes, inflation is peaking. However, inflation is still high. We do have to consider bond markets. Inflation is very high. Fed is still in a hiking cycle, right? Once they start cutting, then we can start thinking about those things. We have a massive balance sheet that's unwinding. Tech companies, right? Earnings aren't doing so hot and aren't expected to do so hot in the first quarter of the year, while tech companies reach around, grab something here. While tech companies realistically are still pricing in layoffs. So we're in a limbo state, and we do look for guidance from the Fed and see what the Fed is doing based on this, right? It's more the expectation of what the Fed is going to do rather than what we think is the right thing to do. Have we seen all-time bottoms for this next bull rally? It might be the case, but do we start rallying from here? I don't necessarily think that is the move. Now, in today's session, I don't think that this extended move lasts too long, right? I'm going to be wrong above certain areas, but just based off of what's going on and us actually holding some of these key levels on the S&P 500 futures, we mark a very, very key resistance at these low 50s, 4150, which was an area that we were looking to sell with our team in the live room this morning where we trade the CPI report. And I want to see if that area can actually reject. Now, there's another key area, 4104 to 07, and that held as a massive support bounce for a 40-point move from that area. Now, that is the bottom of a very, very thick, large distribution block, right? That is the area that's expected to hold for these prices to actually see some more of that upside. So those are going to be the two main areas that kind of sandwich a lot of this price. Now, if we manage to close back below 4105, I think we can try a little more bear, right, even into the Fed. But as long as we maintain above that area, it's going to be pretty hard for the bears to get active. Likewise, above 4150, I really think that there could be some more upside in this market, and we can project out to the longs, right? Even 4200 not out of the question after a 100-point rally from the CPI data in itself. So I'm going to be watching the 4136 region as my first pivotal area to see, will the sellers take that lower, or can we actually hold that out to see that continuation to the upside? So even though we rallied really aggressively, I'm going to be very wary of the longs into this session. I don't want to get trapped thinking, okay, well, they bought it up, I don't know, like 200-300 points over the last few days. That means they're going to continue this move, right? I don't want to be caught in that mentality. I want to make sure that I don't read this as only long, because there could be some kind of sell-off, some profit taking, some turnaround before we get yet another event tomorrow, which could pull out a lot of the volatility of the trading session. So based on that, right, we broke down a lot of what's going on with the CPI. I hope everyone has a great day. Let me know if you have any questions here. But those are my thoughts, right? I'm going to be looking for a little more of that downside to kind of fade this thing off. I'm wrong about 4150, 52. It's very simple on the S&P 500 futures, and we'll go from there. So thank you all. Enjoy the day. Tomorrow we got the Fed, another huge announcement. So I'm expecting a little movement at the beginning of the session tomorrow, and then obviously activity into the end. So that's something that we're going to trade with our trading room. So go check that out at TradeProAcademy.com, where we'll be doing that live. So thank you all. Chat soon, and we'll see you tomorrow. Bye.